Welcome back to the Any Given Quarter podcast, where we break down the biggest trends and forces in the Canadian and global economy in a way that would make Coach Tony D'Amato proud. I'm your host, Ali Jaffrey, Chief Economist and Partner at KPMG Canada. Of course, we give the people what they want, and the people want to talk about trade. So today I'm joined by two very special guests and colleagues, Joy Knott and Lachlan Wolfers, and we're going to talk about the state of CUSMA, or USMCA for our American friends, and try to think through Canada's strategy and speculate a little bit about what the end game might look like for the North American Trade Treaty. Both of our guests have very distinguished careers. Joy is a partner with KPMG's Trade and Customs practice. She's basically the expert on all things trade, customs, and compliance, and the person you call when you want to know what the latest tariff measures include or don't include. I know that because I do that too. Before her KPMG life, she was the president and CEO of the Canadian Association of Importers and Exporters. Lachlan is a partner and the national leader of KPMG Law, the law firm affiliated with KPMG Canada. Lachlan also serves as KPMG's global head of indirect taxes and data for tax and legal. He has extensive international experience advising businesses around the world, including 13 years with KPMG in China, and he brings a unique global perspective to today's conversation. Both Lachlan and Joy are frequent commentators on trade and international developments in the national media. Welcome to you both.
Great to be here, Ali. Thank you.
Thanks for joining me today. So let's just dive right in. And I'm going to start with you, Joy. Today is July 14th. We're 2 weeks past what was supposed to be the deadline to renew CUSMA. So why don't you lay out the nuts and bolts and set the context for our listeners today? What's the state of CUSMA right now? Is there a timeline we should be thinking about? And where do negotiations stand?
Okay, so July 1st, in my view, is probably one of the biggest non-story stories that there's been in a while, meaning nothing of significance happened on July 1st, other than the United States formally announced that they were not going to automatically renew the deal, the CUSMA, the USMCA, for 16 years. So what does that actually mean? It means everything today is exactly as it was before July 1st. And in fact, it's exactly as it's been since March 7th, 2025, since there was an executive order in Washington that said CUSMA, USMCA, will protect imports from, at that time, it was one set of tariffs called IEEPA. Now it's a different set of tariffs called Section 122. But in essence, nothing has changed. And where the negotiations stand right now, that's a different question. I don't really know the answer to that. I don't think anybody really knows the answer to that. The talks are happening. We've heard through main media and even from the government themselves has admitted that they are in discussions with Washington, but it seems that the Mexican conversations are far ahead of where the Canadian conversations are. But I mean, I'm sure we'll get into it, but I don't necessarily see that as problematic.
Okay, and so right now, basically the sectoral tariffs on autos, lumber, steel, aluminum are still in force.
Yep.
And in the media, and the U.S. administration has said a couple of times itself, there's a discussion about irritants with Canada. So lay out some of those challenges that Canada might face at the negotiating table.
So I think probably everybody's seen in the news recently, one of the ones that's being talked about the most in recent days is the alcohol on provincial shelves. That's an irritant. Supply management, which is a long-standing irritant between Canada and the United States. In fact, that's an irritant that stands between Canada and almost all of its trading partners. So the dairy supply management. There's also the digital and cultural type things, such as the digital sales tax, digital services tax, which we got rid of last year. And then there's cultural ones, for example, like the news media streaming. So if you've ever seen on Facebook, something will say you can't see this content because it can't be viewed in Canada. There's that sort of thing. And then there's the Buy Canadian policies. And most recently, that speaks to specifically dried milk that's used to make cheese. So that's not a comprehensive list of all the irritants, but those are the main irritants at this point in time. That's not to say we don't have irritants, though, that we want to bring to the table.
Of course. So dried milk that's used to make cheese. So That seems like a manageable list, no?
It's a very manageable list. The one thing that I think would be the toughest out of all of these would be the dairy supply management, but that goes back decades. I mean,
Yeah.
that's not a new issue. It's similar to the lumber issue between Canada and the United States. It's a long-standing irritant, and I don't know that there's going to be an easy solution to that in anytime soon. But all the others, yeah, I think that they can be on the table and absolutely be points of negotiation. I don't see any of them as being, a fatal pill.
Yeah. Okay. So Canada's effective tariff rate still in that 6 to 7% range, lower when you account for some of the substitution. But really, the conversation now is about how we negotiate at this negotiating table with the U.S. and Mexico. So let's turn to the strategy part here, and Lachlan, why don't you have first crack? So it seems like the U.S. is trying to play divide and conquer between the U.S., Canada, or Canada and Mexico, and they're seeking these bilateral protocols, kind of a bilateral overlay, and asking for upfront concessions from both parties. So, what should Canada's objectives be, and what should be their approach in these negotiations?
So maybe before I get to that, Ali, just an observation on the way Joy presented that. What you've got is two very different negotiating strategies here. The US side is negotiating things through social media in a very public domain. The Canadian side is very closed doors in terms of the discussions, to the point where most Canadians, including many of us on this podcast, probably can't sit there and say with any real degree of insight exactly where things sit from a Canadian perspective. That's intentional. Okay.
Yeah.
So if we look at that and recognize that's what's happening here, and we talk about irritants, we all know the American irritants, but how well do we know the Canadian irritants? I'm pretty confident there are some there as well. So, I look at this, and part of the objective here is to separate the noise from what's the real substance. And, issues around, Canadian provinces agreeing to supply US alcohol, I really don't think moves the needle economically.
Yeah,
because even if you put that on the shelves, Canadian consumers will still decide whether or not to buy US alcohol, right? So I think a lot of that's noise. So if we stand back from it, I would say, yes, it's a negotiating strategy, Americans, to try and separate Mexico from Canada. But actually, the root cause issue of what is driving a lot of the US strategy here is they don't want, the US president doesn't want to go to US Congress to get approval. So a lot of this has to be a series of side deals that exist as an overlay to the existing agreement, because congressional approval would not be guaranteed and is not a pathway the US president has so far been willing to traverse at any stage through the tariff discussions we've had dating back to January last year. So when I look at it from a Canadian negotiating perspective, my very simple position is Canada needs to be specific and transactional. Specific in the sense of saying, we are not looking to negotiate some sort of comprehensive new agreement with the Americans. We are looking to transactional nature of things where we give a little and we get a little in return for removing some of those irritants. I think that's really important, because what the Canadian government is ultimately going to face into, in my view, is a need to sit there and have a conversation with Canadians to say, we've had to sacrifice the position of a couple of industries. Here's how we're going to support those industries.
Yeah.
But we've done so as part of a bigger picture here, which is we're trying to preserve the ultimate relationship that Canada has from a trading position across the entire economy with the Americans. And just to give you a couple of numbers here.
Yeah.
If you read Canadian news, you would think that Canada is losing the trade war, right? But if you look at the position internationally and statistically, the single biggest winner of this trade war is Canada.
Yeah.
So the average effective tariff rate after substitutions at the moment, Ali, is sitting globally at between 11 and 12%. The average effective tariff rate on Canadian goods after substitution effects is about 4.5 to 5%. Our rate is half that, or less than half that, of any other country in the world. And you wouldn't have that perspective if you read Canadian news. So my point is, we are going to have to give some things. If we can keep it to specific industries that we can then choose economically to support, restructuring, subsidies, whatever is needed in those industries, that's the best case outcome from a Canadian perspective.
Very interesting. So let me just react to that for a moment there. I take the point on substitution, but we've lost a lot of trade too. That's what's pushed that number down. But still, nevertheless, that even if you look at the trade shares before substitution, we're lower. So I generally agree that we've done better than particularly most other advanced economies were comparable. But Lachlan, so how should Canada go about a transactional relationship in these trade negotiations when the U.S. has, taken a very strong position? Doesn't seem like they're willing to budge, and perhaps they're willing to escalate further. We've seen a little bit of that pressure being applied in the instance of the Gordie Howe Bridge, where Canada had to cave a little bit. So it seems difficult, to deal with them. Is it a matter of waiting, or does Canada have levers that they can apply in these negotiations?
So the way I look at it is this. So firstly, just want to acknowledge, even though the tariff rate is lower on Canada, there is a greater degree of economic dependency that Canada has than many other economies in the world. So it is impactful. I don't want to be seen to diminish it. I guess I would say a couple of things. Firstly, the answer from a Canadian perspective lies in the trade deals that the United States have reached with other countries. If I take UK as an example, they were very narrow in terms of what was agreed. Same with Europe. And there were a bunch of promises that maybe we might do X, Y, Z in the future and what have you. Yeah. They basically kicked the can down the road on any solid commitments in return for getting relief. In the case of the UK, 10% tariff relief on most major products that were coming from the UK. You saw this very similar with Europe. You saw the same in Japan and Korea and other countries. Transactional, specific, but also making various promises that kick the can down the road from an international trade perspective wouldn't be the worst negotiating strategy. The second thing is, and you're seeing the Prime Minister do this very, very clearly, he is continuing to pursue trade pathways for Canadian businesses with many other countries around the world, many of whom have not been traditional trading partners. Yeah. So creating a degree of competition, whether it be China in opening up the electric vehicle market, albeit in a somewhat limited way. More recently, you saw him in Saudi Arabia, for example. You're going to see more and more of that. And I think it's really just saying where we Canadian businesses are prepared to operate in an international market. We want to be able to compete effectively, and I think that's going to be an important part of this. I think Canada has a lot of control over the outcomes that it's seeking here. And what I mean by that is the answer doesn't purely lie in the trade deals that are reached. It actually lies in trade diversification that Canadian businesses need to engage in, as well as the long-standing interprovincial trade barriers that we've heard about for many, many years as well.
Yeah. Jordan, let me turn to you. What are your thoughts about the strategy that Canada is employing? Is it working? And how do they manage taking time to get the right deal with the economic damage that it causes from businesses pausing investment and hiring decisions?
Yeah, so there's a lot to unpack there. So, do we have the right strategy in place at the moment? I agree with what Lachlan was just saying. There's, I heard an expression the other day where, they may own the clock, but we have the time. So by that, I mean, taking our time and having this kind of a deal, meaning the existing deal with some exemptions that are currently in place, is better than signing a bad deal. A bad deal you're stuck with for years. And right now, as you guys just discussed, we're not in that bad a position. Does it hurt? Of course it hurts. And for companies that are directly impacted by these tariffs, they're feeling the pain full on, where other companies are not feeling that pain to the same extent. That being said, Jameson Greer made it very clear when he was testifying to Congress last December on advising Congress as to what his thoughts were as the U.S. trade representative on what the U.S. position should be for this July 1st. And some of the comments that he made were that there were load-bearing pillars in the free trade agreement that definitely advantaged the U.S. So we have to keep that in mind. It's not like they have everything to gain and we have everything to lose. There are things that Canada and Mexico, for that matter, the trade that goes between all three countries, that advantage the United States. And the USTR, Jameson Greer, made it very clear that he understands that, which was, for trade geeks like me, which was a bit of a relief.
Mm-hmm. Yeah. So let's turn to the issue of threats here. And Lachlan, why don't you lead off here? That, it's becoming more difficult to really take U.S. threats seriously, but inevitably there'll be more of them. And even if we know that they're hollow, they still have businesses pausing economic activity and investments. So how do you advise Canada to respond to those threats?
Don't. That's the short answer. So that's my one word answer. So let me elaborate a little bit further for you, Ali. So I was reading my 4-year-old, the Aesop fable of the boy who cries wolf. Kind of reminded me a little bit of what we're seeing.
Yeah,
and so,
story.
When the Liberation Day tariffs first came out, from recollection, March or April last year, there was huge market reaction. And every time you see another announcement, the reaction becomes lesser and lesser. We become immune to it. And part of that immunity comes about because of two main factors. Firstly, threats are made, but often not carried through. Let me give you a couple of examples. There was a threat of a 200% tariff on alcohol coming from Europe. Hasn't happened. There was the 10% tariffs on films that are produced outside the US. Hasn't happened. And perhaps the US president needs to understand that tariffs typically apply to goods, not services and intellectual property rights. So that would have been a novel use of tariffs. 50% tariffs on Canadian-made aircraft, unless Canada certified Gulfstream jets, for example. Hasn't come to fruition. We keep seeing it. So that's the first thing. Threats made, but not carried through. People stop listening. The second factor is the US courts have taken some of the power away from the US president as well. So not just in terms of the IEEPA tariffs, but also some of the temporary tariffs, the power to do that has also been impacted. And so you get a sense that you've got this person, drumming up and making a lot of noise, but not a whole lot of carry through on that as well. And I think, Prime Minister Carney and the Canadian, government position has been very, very good ever since the initial winding back of the digital services tax, where they caved to the US demands or threats and withdrew the digital services tax, for which they extracted precisely nothing in return.
Yeah.
Okay. And I think there was a lesson learned at that point that says we're not going down that pathway again. And I think that is the answer, is we're going to keep on focusing on what we're going to do. You can sit there and make whatever noise you like in the corner. We're going to keep on focusing on what we, Canada, need to do.
Okay, so Lachlan, that's an interesting point you raised there. Now, but it really comes back to, if we're try to get something in return from the U.S., what do they want? What do you think the U.S. objectives are at this point? It's kind of been a moving goalpost. When the president was elected, it was really about generating revenue. It seemed he wanted to create another federal agency about tariffs and raising revenue. Some of it has been political discussion around China, real focus on rules of origin. What do you think the U.S. perspective here is?
So let me summarize in 2 words. It's what most billionaires want. They want money and they want control, and that's what they want. It's as simple as that. Money in terms of tariff revenues. So it is a key part of the president's agenda. And he was looking at, originally raising in the vicinity of $2 trillion over a 10-year period from tariff revenues. I think that's now been scaled back somewhat to, 1.2, 1.3 trillion. That's still a very sizable revenue raising objective to fund his agenda, which is generally a low tax agenda. And the second thing is they want control. They want power. They want a situation where They are emerging as the dominant force from a trade perspective, certainly vis-a-vis threats from China and many other countries around the world from a trading perspective. And so far, I would say that second objective is not being achieved. In fact, I would almost suggest that when this trade war kicked off, many of us were concerned it was going to give rise to a whole lot of bilateral trade wars between a bunch of third countries. Did not eventuate. In fact, what you saw is governments around the world hold firm to free trade positions and in fact trying to enhance more and more bilateral free trade agreements between countries. And so the US has kind of emerged as the outlier in this area.
Yeah, absolutely. And the trade data really bears that out quite materially. It's amplified by what's happening in AI and strong demand, but you've seen global trade evolve quite materially. China's trading a lot with Europe, China's trading a lot with ASEAN. Canada's obviously trying to diversify, but you're seeing global trade patterns shift quite quickly. I'm not saying the US is necessarily being left out, but countries are still well engaged in international trade, particularly in goods. So I don't see this as a real damper for the global trading environment. It's a matter of finding out different ways to engage in trade, building new supply chains. And interestingly, speak with CEOs and boardrooms across the country. And what I've started to hear, particularly from the Canadian side, is that they're trying to find ways to optimize international trade for other countries that are trying to export to the United States. And they're finding that it may be cheaper to bring products in through the port of Vancouver and ship it through Canada into the West Coast by truck or by rail. Now, that's a process that takes time, but the global trade order is just adapting to what they're seeing now. And that's exactly the same thing that happened when the U.S. administration, first Trump administration, levied tariffs on China. There was an adjustment in the global trading system. You had more trade flow into Latin America, and China rebalanced a little bit. So, yeah, I see this as not as damaging as what people suspected for the global trade order, and some significant adjustments being made. So let's move into what the end game scenario here could be. So Joy, why don't you lay out, where you think this is going to go, and if you have any thoughts about timelines as well.
Sure. So just leveraging off of what Lachlan was just saying, I agree with everything that he said, and you as well, Ali, at the macro level. What I'm seeing as a practitioner who gets down into the weeds of international trade is that control factor is also starting to happen at the micro level. And what I mean by that is that on June 3rd, there was an executive order that made the news nowhere. It had nothing to do with tariffs, but the name of the executive order is strengthening customs enforcement. And when you read that executive order, it's all about thickening the border. It's all about making the actual act of importing into the United States more difficult than it has been traditionally. Now, that particular executive order requires that there be new legislation in place for some parts of it within 90 days, which would be September 1st, and other parts of that executive order, it's 180 days, which would be December 1st. So I just wanted to point that out, that there's the control factor that they're not necessarily being all that successful with at the macro level, but then there's this silent movement at the micro level that I think companies need to be aware of. And what does the end game look like? I don't actually know what the end game looks like, but what I think is going to likely happen is that for the next year, maybe two, we're going to continue bumping along the road the way that we've been bumping along the road, meaning that there's going to be conversations, there's going to be negotiations, there's going to be points in time where everything stops and we're not talking anymore, and then we'll start talking again later on. And at some point, the administration, there will be a presidential election in the United States. Mm-hmm. And at some point in the future, I think that we could likely come to some sort of a long-term deal. I'm not seeing an agreement on a long-term deal anytime in a short period of time, meaning in the next 2 years. I don't think that that's going to happen.
Joy is bearish. Lachlan, what do you think?
So one of the reasons I like presenting with Joy is I often take a macro perspective, and Joy takes the micro perspective, which is really important. And so I just want to emphasize this: the trade war, if you're sitting in the auto sector in Windsor, Ontario, looks very different than if you're sitting, say, in Toronto or Vancouver or Calgary, for example. So I do want to acknowledge this point: very differential impact. Let me just say this in terms of how this is going to end. It's going to end with a whimper, not a bang. And what I mean by that is we are being conditioned to accept trade uncertainty. We're learning to manage that uncertainty. And so whilst you get, tantrums that happen and flare-ups, I think it's really important to recognize that the whole nature of global trade, the whole objective of global trade is it should just be happening, and it should be invisible. You shouldn't be having people like Joy and myself on Bloomberg and other channels every other day, because it should be boring. That is the whole point of global trade.
Yes.
It should just happen. What I'm saying is, I think we're being conditioned to accept a certain thing. I also don't believe that tariffs are just going to end at the end of the current US administration.
Yeah.
We saw that with President Trump's first administration. President Biden did not wind a lot of those things back. He just didn't appear in the news media making announcements about it every other day. And the other thing that we also see is the playbook that Trump uses is very much, I start very wide and then I create exceptions and narrow till it becomes a more manageable level. So I think this is going to end with a whimper, not a bang. And I also don't believe it matters whether an agreement is reached or not. That agreement will not be comprehensive, will probably be not adhered to for all that long anyway. Not worth the paper it's written on is my assessment.
I agree with you there that what you see is in the data is exactly as you described, Lachlan, that if you look at measures of uncertainty in Canada, trade uncertainty, they peaked when tariffs were first applied at the early 2025, and they've been gradually coming down. Despite the fact that we have no tariff relief, but the headlines are moving up and down, threats are coming and going, and obviously not being acted on, as you mentioned. And I think Canadian business are just getting on with it now. And the data is starting to show a little bit of that, right? Hiring is improving, as we've seen in the last couple of labor force reports. Trade activity has actually picked up quite materially. And now, granted, it's concentrated in energy products, both to the United States and abroad, maximizing pipeline capacity. But that also confers on Canada some leverage. That the economic pain, we're past that peak of the trade shock in terms of the economy. And I expect something similar, that we won't get that big shebang of a deal that, hey, we're buddies again. This is a renewed trade relationship. We learn to live with sectoral tariffs around the levels that we are. I think we'll get something probably on steel and particularly aluminum, because there's a lot of pressure there. And the reason why I think the United States doesn't have the leverage to intensify its threat against Canada, or at least meaningfully with any credibility, is what's going on in U.S. inflation, what's going on in the treasury market. So we got CPI data this morning in the U.S., and yes, it's come down. Inflation's come down in the U.S. Because of oil prices came down, but we know based on the headlines today that they're going to rise again in July and likely in August, given the conflict with Iran is not settled. And so what degrees of freedom does the administration have to tighten the screws on Canada and Mexico? And also at the same time, the Federal Reserve, central bank in the US, is talking about raising rates to cool the economy and to manage inflation. What are they going to gain from tightening the screws on Canada and Mexico? Not much, particularly when trade shares are weaker. So they're not going to generate a lot of revenue, particularly on Canada. And with Mexico exports not just cars, but food. So you'd have to have substantial carve-outs on energy and food to really do anything meaningful on Canada. And then you're just bringing the revenue share down. And it's not really worth it. So I like that analogy that this ends up being a whimper, and we all just kind of get learn to live with this and move on. Now, it will have a sizable impact on the Canadian economy that I don't think we'll ever fully recoup, at least not in the next half decade or so. That's the reality. There's some scarring, but that can be overcome as well. I don't think it's going to have a major dent on our long run growth rate, but it will have some dent. I think about a quarter of a percentage point or so. So I think we're all close there. Now, what does this mean though? And Joy, why don't you lead off here? What does this mean for the C-suite? What's your advice to Canadian businesses? Who themselves will have very different views about the trade war and the outcomes that may arise. What's your advice to them as they navigate these talks while trying to think about investment and operational decisions?
I mean, obviously, the particular advice changes depending on what industry sector the company's in, but wide sweeping, try and take advantage of CUSMA as much as possible. And for a lot of companies, that's been a real awakening. The amount of exports to the United States that Canada used to declare as qualifying for free trade prior to all of this stuff starting was about 38% of exports to the US claimed free trade agreement. Now it's closer to 85%. So for a lot of companies, there's been at the executive level this waking up moment of like, do we qualify for CUSMA? And what do we need to do for that to happen? So suddenly it's become far more of a conscious thing in companies. So that's number one. Make sure that you're taking advantage of all of the exceptions that are available to you. The second thing would be, I think, to prepare for the thickening of the border, like I was talking about. There's going to be some changes that are going to need to happen. That executive order that I was referencing earlier on June 3rd, it's saying that in order to be an importer into the United States, for example, this is just one example, a company is going to have to show that it has significant tangible assets in the United States. I can't define that for you because right now it's not defined. We're waiting to hear what exactly does that mean. So for a lot of companies, there's going to be that reality of, are they going to continue to be the importer of record into the United States? Because a lot of Canadian companies are. Or are they going to have to sit down with their customers in the United States and potentially have a conversation to say, we need you to be the importer of record, which means they directly pay any tariffs, which will change, I think, a lot of the feedback that the White House gets. The more that kind of thing happens, I think that you're going to get more and more feedback that goes into the Oval Office to say, hey, this is getting painful. And then the final thing that I'll say, and this sort of leverages on what you were just talking about, Ali, is that Canadians need to look at diversifying our exports. Traditionally, 75 to 77% of all of our exports went to the United States. We need to balance that a little bit more. Diversifying exports is really something that, I get asked all the time, is that a realistic goal, Joy? Can Canadians actually diversify their exports to any degree that's going to be material? And my answer to that is yes. Canada has 15 free trade agreements with 51 countries around the world, accessing 1.5 billion consumers and over 60% of the world's GDP. If Canadian companies need tariff-free access to markets, we have it. But you have to start thinking east or west as opposed to just strictly south. So, I'll sort of leave it there. There's, again, like I said, advice to each company would depend on specifically what industry sector we're in. But, I think those are the big, wide sweeping. This should apply to everyone.
Great. And Lachlan, what do you think?
Yeah, so maybe I liken this trade war to a little bit like going to the dentist. It's not fun to do it, but we all know it's good for us. And I think we're going to emerge from this, Canadians are going to emerge from this saying, well, we learned a lot along the way in three areas. Number one, trade diversification is imperative for Canadian business future, whether we had a trade war or not. The second thing is that going into this, most Canadian companies didn't know their supply chains, didn't know what tariffs or other measures were actually being impacted within their supply chains. They now know that. They now understand that a lot better than they did before. And then thirdly, I think this is the wake-up call for Canadian governments, both federal and provincial, to say, how do we start to implement some of the larger reforms we need in the country, whether it be interprovincial trade barriers or even tax reforms that are needed to create more competitive settings for Canadian businesses to flourish in the new economy in which we now operate.
Yeah, that's great. And I would just add onto both the comments you just made that yes, we need to diversify trade. I completely agree with that. But we need to also think about the products that we sell. And we're very focused in this country about the goods sector, manufacturing products and things that we produce, the stuff, the tangible stuff. But the reality is that, and Lachlan, as you know very well, having lived and worked in China, that factory Asia has dominated manufacturing, and not just at the expense of displacing Canada, but most advanced economies, including the United States. So we have to have a serious conversation about, yes, the markets that we diversify, but the business that we engage in with the rest of the world. And Canada has struggled certainly in manufacturing, but it hasn't struggled in the service business. Canada's service sector is very strong. And a lot of experts in global trade really advocate for rethinking international trade on the lines of services, financial services, technology, legal services. A wide range of services are going to be in high demand in emerging market economies as they move up the development ladder. So I'll just throw that out there. Last, most important question here, guys. It's July 14th. So the semifinals of the World Cup, we got Argentina and England on one side of the bracket, France and Spain on the other. Joy, who do you got to win it all?
France, hands down, France.
There's some confidence there. How about you, Lachlan?
So my first answer is anyone but the English, because they'll be insufferable if they win this. Leaving that aside, my money's on the Spanish.
Awesome. Thank you both for joining me today for this great discussion. We'll leave it there, and I want to encourage our listeners to like and subscribe, and thank you all for listening.